So you have a home that you bought a few years ago at a low rate, and now your home is worth substantially more. And you're thinking, hey, why have all of that equity be going to waste? What is a HELOC and should I get one? Well, if you're looking into a HELOC and wondering what it is, how it works, and why you'd even want one in the first place, this video is for you. Let's get to it. What is up, everybody? Welcome back to the channel. If you didn't already know, my name's Jay Costa. I'm a real estate agent, builder, and investor here in Northern New Jersey. And if you get value out of this video after watching, make sure you watch first and get value. But if you do, smash that like button down below and also consider subscribing because we're slowly building a tight-knit community here of like-minded individuals looking to build wealth, specifically in real estate, and even more specifically using a HELOC, that is a home equity line of credit. And it has been over 2 years since I started giving you guys HELOC content. Maybe you're new to HELOCs, you have some equity in your house, and you want to access that equity for any which reason, but maybe you don't know where to start. So that's what this video is for. We're going to go over what a HELOC is precisely, how to use it, how to apply for one, what not to use it for. I'll give you some tips on when you're applying, what to make sure that you do, and also the risks that you need to be aware of before signing up for that HELOC. So first things first, what is a HELOC? Well, HELOC stands for Home Equity Line of Credit, and it is a revolving credit line based on the equity that you have in your home. Well, what is equity? Well, equity is the value of your home minus what you owe on the home, on the property. So if your house is worth $800,000 and you owe $600,000, that means you have $200,000 worth of equity that you could tap into in your home. And how it works is very simple. Once you apply and the bank approves you, they give you a checking account and a checkbook with checks connected to the line of credit, and you could write checks or you could transfer in and out of this account. And anytime you have a balance, that's when you have to start making payments on the HELOC. You do need to be aware that the home equity line of credit lender does add a second lien to your property, since a HELOC is a secured line of credit. So if you don't make the payments, you lose the house. Now, what can you use a home equity line of credit for? Well, you can pretty much use it on whatever you want, but the most common uses of a home equity line of credit are things like consolidating debt, using it as an emergency fund, using it on home repairs or home renovations, or the biggest topic that we cover on this channel, and that is using it to invest in real estate. An alternative to a home equity line of credit would be something like a cash out refinance, but most of us, almost all of us, either bought or refinanced our home during 2020 or 2021 when the interest rates were super low. So a HELOC is a very powerful tool where you don't have to get rid of that first mortgage. You can keep that juicy low, all-time low interest rate while also having a HELOC that has a lot of flexibility. You could take money out of it and pay it off as you please, as long as you're making those minimum payments. With a cash out refi, you basically have to be paying off that first low interest rate mortgage and replacing it with a higher interest rate one, where that doesn't really seem to make much sense for most people right now, and I don't really blame you. So how do you apply for a home equity line of credit? Well, very simply, you have to start by finding a lender. Don't go to Bank of America or Chase or anything like that. Go on Google and type in your area HELOC credit union. And find a credit union, actually find 3 credit unions or maybe even regional banks that know your area and apply to them. Reach out to them to apply for a home equity line of credit. I've come to the realization that local credit unions and banks offer way better terms and way better HELOC programs than a large national bank does. There's a bunch of reasons for that, but the main reason is because they're familiar with your area. And I equate it to almost like comparing a McDonald's Big Mac to that local burger joint that you love. Yeah, a Big Mac does have its place sometimes, but it'll never compare to that local joint that's been around forever that you grew up going to that makes your burger just right. So you go to each lender and you're going to need to know before applying what some terms mean. First is LTV, which stands for loan to value. And that's basically the percentage of your equity that the lender is willing to give you access to. So using the same example that we had prior, your house is worth $800,000. You owe $600,000 on it. That means you have $200,000 worth of equity in the property. But the lender is not going to give you access to 100% of that $200,000. That would be a bit too risky. Usually, most lenders offer about 75 to 80% LTV, but you could find ones 90, 95% LTV, but there are some trade-offs for that. I'll get to that in a little bit. So let's say the lender that you find, one of the lenders that you find offers 80% LTV. On that $200,000, that would mean you have access to $160,000 of that $200,000 on a HELOC. That's what they're willing to give you access to on that credit line. You'll also need to know what an interest rate margin is. HELOC lenders pretty much always are based on the prime rate, which is set by the Federal Reserve, which is currently, I believe, 8.5%. But they don't charge you 8.5%, they charge you 8.5% plus a certain spread or a certain margin above that. Now, it's going to be different depending on each lender. It's going to be different depending on what your income and what your credit score is, as well as how much equity you're looking to gain access to. But generally speaking, you could find lenders giving you a HELOC spread of about 1% to 1.5%. So if it's 8.5% prime rate right now, and your lender is offering you 1.5%, that means you're paying 10% interest on your HELOC. Now, when you go apply, I did say to find 3 different lenders. The reason for that is not just to see which has better terms and interest rate margin, which is very, very important, but one of the biggest reasons why I say to apply to at least 3 different lenders is the appraisal. HELOC lenders generally tend to pay for appraisals themselves. They'll send an appraiser out to your property, no money out of pocket by you, and they will give you an appraised value of your home. But not every appraisal is the same. For instance, when I applied for my home equity line of credit, I got 3 different appraisers to come out to my house through each lender, and each appraisal was so much different price-wise. And a big reason for that is because sometimes they'll send an appraiser for just an external or an exterior appraisal, and sometimes it'll be a full appraisal. You know, sometimes they do, since they are paying out of pocket, they do just send for an exterior appraisal to save on costs. But the difference in my situation between the exterior appraisal and the full appraisal was $80,000. So apply to 3 different lenders and have them all send out appraisers to your property and go with the one that has the highest value. So when you're looking to decide on which lender to go with, you need to go by the best terms, the best interest rate, and the highest appraised value of your property. Now, what are the requirements for applying and getting approved for a home equity line of credit? I get a lot of questions from you guys in regards to this, specifically what your credit score needs to be. Does your credit score need to be good in order to get a home equity line of credit? And generally speaking, the answer is yes. You need at least a decent credit score of, I would say about a 620 credit score is probably bare minimum for getting approved for a home equity line of credit. So if you're below that, go and start improving your credit by paying off debt first, and then you could apply later. In addition to your credit, they're also going to base your application, whether they approve you or decline you, on both your income as well as the value and the equity that you're looking to get out of your home. The more equity you're looking to get, and maybe the lower the income and the lower the credit score, the more risky the lender's going to see you as an applicant. And even if they approve you, it may be for a higher interest rate or a lower LTV than what they offer other people. Also, when you're trying to pick out a lender, make sure that you ask them about any particular promotions that each is offering. For instance, the biggest or most common promotion is a lot of these lenders will give you an introductory, very low interest rate for like a first year or so in order to get you started. See if they have any promotions in regards to getting that interest rate margin down if you open up other accounts with them. These banks, these lenders want you to do banking with them more than just the HELOC, right? So a lot of the times, if you open up a checking account, or if you're a W-2 employee, they love direct deposit. Ask them, if I set up another account, if I set up direct deposit into this account, what can I get that interest rate margin down to? And see how they can help you. I bet they do. Now, the last thing you need to be aware of when applying for a home equity line of credit are the closing costs and the fees. Now, HELOCs, unlike conventional standard mortgages, are kind of known for their low or no cost or no closing cost programs, but they're not all the same. So definitely make sure you know what you have to pay out of pocket. Honestly, I don't think I'd pay any more than $100 for an application on a home equity line of credit at this point, because you really don't need to be paying anything out of pocket. Make sure you don't have to pay anything out of pocket for the appraisal. Make sure there's no annual or monthly fees that you need to be aware of. And just ask as many questions as possible in regards to how much it's actually going to cost you out of pocket after applying and after getting approved for the HELOC. So how is interest calculated on a HELOC? Well, a HELOC uses a variable interest rate. That means it can change going up or going down at any time when the Fed meets. And as I stated, that interest rate is based on the prime rate plus a certain spread that you and your lender agree to. Now, unlike a standard conventional mortgage that's amortized over a certain period of time, a HELOC uses what's called an average daily balance. And that's exactly what it sounds like. It's the average balance that you have per day on your HELOC, and they basically set the interest rate to that amount. So let's say you owed 50 grand for the first half of the month and 25 grand for the second half of the month. Your average daily balance is going to be about $37,500. And you're paying interest on that amount, not the 50 and not the 25. Now, once you actually hold a balance on that HELOC, you're going to need to know how your payments work. So you need to know a HELOC is split up between two different periods. The first period is what's called the draw period. Usually this lasts for only about 10 or so years, and this is when it's interest-only payments, minimum payments on the HELOC. Now, after that 10 years is up, that's when it transitions into what's called a repayment period, where it basically takes that HELOC and sets it into an amortized loan where you have to pay both interest as well as principal to start getting that balance down. So what are some ways that you can use a home equity line of credit? You can use it to consolidate debt. You can use it to add on to your house or repair home repairs. You could use it as an emergency fund. Instead of having 20 or 30 grand sitting in a savings account, you can have that invested somewhere else in the S&P 500 or whatever, and use a HELOC for, something that is unforeseen emergency-wise, whether it's medical or anything like that, God forbid. If you know you have at least a way to pay that bill and then deal with it later, that can give you some peace of mind, but you need to be aware of the risks involved of this HELOC, because if you just start drawing and pushing off and kicking the can down the road on getting that balance down, you're going to end up after those 10 years with a heavy, heavy payment that you may or may not know how to pay back. And if you don't pay it back, you will lose your house to foreclosure. And actually, this can happen before even those 10 years are up. In fact, most HELOC lenders in the fine print actually do reserve the right to call back the full balance at any time. This could be because of a situation with the lender. Maybe the lender's going out of business. It could be, major economical situations. This did happen in 2008 where they froze HELOCs and started calling back the balances right away. Now, as you can see, HELOCs can be used for great good, and they're very powerful financial tools, but they have a lot of risks that you need to be aware of. And because of that, it's not really for everybody. If you're the type of person that tends to rack up consumer debt, don't get a HELOC. You don't need access to this money at all if you're just going to use it as basically a piggy bank to go on a vacation or to, redo your kitchen or anything like that. Those are not good ways to use a HELOC. It'll end up leading you to financial ruin and maybe even foreclosure and bankruptcy. So I'm going to share with you my 3 rules for using a HELOC. Number 1, it should always be short term. So because a HELOC has a variable interest rate, it's not made to hold a balance long term. That means don't use it to go put it in a pool and then just pay off over time. Don't use it as a down payment on an investment property, a long-term investment property. Since it's a variable interest rate, you don't know what the future payment is going to be. And if you don't know what the future payment is going to be, you're at the whim of the Federal Reserve and you're at the whim of the economy. And you could be caught with your pants down very, very easily. It's going to happen. Instead, use it on short-term investing, a fix and flip, or using the BRRRR method: buy, rehab, rent, refinance, and repeat. Buy a property, rehab it, rent it out, and then go get a conventional long-term fixed rate mortgage. Because that is the biggest tool, the biggest advantage that long-term real estate investing has, which is the long-term fixed rate mortgage that never changes while rent goes up. And if you use a HELOC instead of that, you're really just forfeiting that biggest wealth building tool that real estate has to offer. Number 2, you should always have an exit strategy when using your HELOC. So it's okay to use a HELOC on something like putting in a pool, but you need to have an exit strategy. How are you going to pay it off? Maybe you have a lump sum of money coming in shortly that you're going to pay it off with. Maybe you live by commission like I do, where you're going to pay it off with that money, but don't hold a balance for something that's not income producing for longer than a year or 2. And always have a plan to pay it back. And this brings me to my last HELOC rule, and that is to never take money out of your HELOC that you can't pay back in another way. Now, this is just me. Some people disagree with me in the comments. If you do, drop a comment in the comment section down below and let me know why. But just me personally, I'm not risking my home that my family lives in order to make a buck. I just refuse to do it. So if I take 100 grand out of my home equity line of credit, I need to make sure that that 100 grand is somewhere else making money in some way. This could be in a brokerage account or a retirement account. You need a worst case scenario plan to pay off that balance, especially because, like I said, the HELOC lender can call back that balance at any time. If you want more HELOC content, both the best HELOC lenders, the best ways to use a HELOC, the worst ways to use a HELOC, as well as how to use a HELOC in order to build wealth in real estate, you'll definitely want to check out my HELOC playlist. I'll put in the corner here as well as in the description box down below. Definitely check that out. I appreciate you guys so much for tuning in. Drop a comment in the comment section down below and let me know what you think about HELOCs and what I say you should use your HELOC for and what I say you should not use it for. Let me know in the comment section and I will see you next time.